Hello everyone, how are you? It's Kei. I hope you have a great day today. So this is a video where I talk about my own strategy, and today's video is part 2. So I hope you enjoy the video until the end. So let me switch screen first. And so a couple of announcements. First is the theme in August 2022 is overview of Kei's trading strategy, which I will be doing today. This is part 2, and today I will talk about the overview of my own strategy, like how I see charts and how I screen charts and how I entry and exit. I will talk about the overview of my strategy today on this video. And theme in Saturdays, I talk about trade psychology. So because markets are closed, so in Saturdays I talk about psychology or the risk management, money management topics. So yeah, so let's start today's video. So before starting, a quick disclaimer is basically the things I talk about on my YouTube channel is all based on my own experience and knowledge. So when you take trades, please do at your own risk. And recently, there are so many like fake accounts and spams on social media, so please be careful. I don't do Telegram, Instagram, Facebook, and I don't send direct messages to anyone through the social media, so please be careful. So in case you want to reach me out, the best way to contact me by email. So you can find the below description, the contact email address. So please use the address and send me emails or any inquiries. Okay, so yeah, so this video is about my trading strategy, and I have the slide over here. So let's just schedule. On the 5th of August, I talk about why trend analysis is important, and today's video about this overview of my strategy. I name my strategy as Kei's trading strategy, which is KTS. So whenever you hear me say KTS, that means it's my own strategy. So as you may know already, I use ichimoku kinko hyo in multiple time frames. And I'm a Forex trader. Mainly I trade Forex. And when there's a trend, I trade gold, I trade WTI, but mainly I focus in Forex. In Forex markets, the market's moving up and down every day, every week. So in this reason, I take the daily time frame and 4-hour time frame as higher time frame. And get the confirmation in 1 hour or the 30-minute chart, and then get entry timing in the 5-minute or the 15. Usually I use the 5-minute, but that's my overview of my strategy. So the steps I take is again like this. Oh, by the way, you can find this PDF on my website. I put the link below the description also, where you can download this PDF. It's for free. You can just get this download and get understanding of my strategy. So first, I identify a major trend, either on daily or the 4-hour time frame. So let me check today's market. I will pull up the trading view. Hold on. Okay, so this is a trading view, and let me see. First, I will check the daily or 4. So usually when I screen charts, I split the window into 2, and on the left, I place a daily time frame, and on the right, I place a 4-hour. So like this, I place daily time frame and a 4-hour time frame, and see whether one of these time frames is trending. Hold on, let me try to fit this into page so that you can see the whole thing. Yeah, sorry about that. So yeah, again, on the left, this is a daily time frame. On the daily time frame, at a glance, this is range because Kumo flat, Chikou span touching. And in the 4-hour, at a glance, this is ranging too because Kumo flat. Kumo technically is up, but overall Kumo has been flat. And Kijun Sen flat, Chikou span is very close and it has been ranging, obviously. So when I see the range on both daily and 4-hour time frames, I simply stay away and go to another pair. So like this, I screen my pairs on my watch list. I have 21 pairs on my watch list. I screen in this manner. So first, so let me go to the next slide. So first, I check the major trend, either daily or the 4 hour. So this is actually important. I don't take both time frames to be trending because it's almost rare to find both daily and 4 hour time frames are trending at the same time. So I take either daily or the 4 hour. So let's say if daily is bullish, I mean there's a good example today, either daily or the 4 hour chart trending, and I mark here pound Swiss franc. If you look at the pound Swiss franc, this was down in the daily, sorry. This is now becoming a bit flat, but you can see that the Kumo Senko span A is down, B is down also. I'm talking about the Kumo Senko span A, B down, and the Kijun Sen down. Chikou span was below candles. So when I saw that, it was downtrend because of the breakout. So this is daily time frame downtrend. But if you look at the 4 hour chart, this is now flat. You see Kumo flat, Kijun Sen flat. So in this case, I take the daily, but not the 4 hour. So that's what I do first when I screen charts. So that's this slide. So in that example, I take the daily was down on that example, but 4 hours was flat. So I take the daily and move on to the mid time frame, 1 hour or the 30. Like this, I step by step identify the trending markets in directions. So yeah, like that. Hold on, let me. Okay, like this, you can see the whole thing, whole slide. So again, I take the daily or 4. So let's say if daily is flat and 4 hours down, then I take the 4 hour time frame and then go down to either 1 or 30. Let's say if 1 is down, 30 is flat, then I take the 1 hour and then look for entry timing on either 5 or 15-minute time frames. If I get the 5-minute time frame confirmation, then I enter there based on the 5-minute. So this is basically how I analyze charts and take trades. So again, it's either. I get this question many times. So just a reminder. So let's say if daily is up 4 hours, daily is up and 4 hours flat, then I take the daily time frame to follow and then get the confirmation on either 1 or 30. Let's say 1 is flat and 30 is up. I take 30 and then look for entry timing on M5 or M15. Usually I take M5 because M5, if I take the M5, that means I have, usually I have smaller stop loss in pips than M15. So I start looking at the M5 and usually I get the 3 confirmations on M5. So I take the M5 to trade. So that's my overview of the strategy. So there is another good example today on the Swiss franc JPY. So let me just move it to here. Swiss franc JPY. If you look at this market, well, I will actually talk about this one on this Friday when I cover this, when I cover the entry timing, which is 12th August Friday topic. But yeah, just to give you an overview today. So in this case, daily is flat and 4 hours up. So I take the 4 hour. So I tick mark on the 4 hour and then move down to H1 or M30. Let me move down. So I put 1 hour on the left and 30 on the right. Let's see which one of these time frames is trending. And right now, I can see that at a glance, they are all flat and retracing. So I don't take 1 or 30 right now because they are all flat. Kumo single span, I think A is up on a 1 hour, but now Kijun Sen is flat and the market is retracing for the last 2 hours so far. And M30 also shows Kumo flat, Kijun Sen flat, the market retracing. So I don't take it in this case. I wait until Kumo moves up and Kijun Sen moves up, points up on either M30 or 1 hour. And then start to look for the buying edge. So right now, they are both time frames are flat, so I skip. And simply when I skip, I leave chart for a couple of next hours. And how to identify and how to confirm these trends by ichimoku, I talk about on Friday and also next week, Tuesday on the videos. So please look forward to it. But that's how I get these entry confirmation from screening charts down to the entry confirmation. And it doesn't really take long, actually. I have 21 pairs on my watch list, but when I screen charts from top to down, it only takes like a few minutes, maybe 2 or 3 minutes. So it's really time efficient. As I mentioned on the previous video last Friday, time efficiency is a key to success, I think, for trades, because you can check charts for hours. You can check charts for hours or minutes, but if there is no trends, if there is no good setups, you have to leave. But then when you leave and when you are not there in the market may be active and it just goes up, and then you might feel the FOMO. But yeah, but it's for me, there is no FOMO even if I missed a chance. So let's say 1 hour is flat and 30 is flat on this Swiss franc JPY, but 4 hours up. So let's say right now 1 or 30 it's flat, so I skip and I leave chart for maybe a couple of hours, maybe 2 hours to 4 hours. I leave chart and come back. And by the time I come back, the market may go up this way. And I might be losing all these pips while it moves up. But it's okay, because if it goes up, that means that this uptrend may be continuous. So whenever I come back, and when I see the good setup on higher to lower time frames, I simply take it. And from there, I follow the trends. And I do this 3 times per day on these screening charts. And if I don't see any trending markets and confirmations on any other markets on my watch list, then simply I stay away and I don't take trades on that day. So after I develop this method or strategy, my emotion became much easier, because before I was constantly looking for the entry timing, and I was always looking for the opportunity to trade because I thought that's the job as a trader. But now I realize that not to take trades is also important. I mean, our job is to trade, of course, to make profits, but at the same time we have to stay away to avoid some unnecessary losses. And I think avoiding markets is, I think, more important than entries. And so when I realized this concept or this secret, so to speak, my emotion gets so much easier. So even if I miss a chance, it's okay for me, because my system says it's no to trade, and I don't take trades. And maybe sometimes, the market just goes backwards against major direction, and I feel so relieved that I didn't take the trade and didn't get the loss. So like I mentioned on the previous video, these strategies should be rigid and it should be verified based on backtesting. So I have been backtesting all these 21 pairs on my watch list at least 100 times in the tester, in the Forex tester. I picked a random chart, random timing on the previous market, on the past market, on all these pairs, and simply take 100 trades based on this concept, and I get about profit factor 5. And that's why I start to use on the live market, and it becomes successful. So it's proved actually by myself, but again, I don't recommend you to believe myself. You have to see if it works on yourself also. So with this concept in mind, please continue to practice based on my strategy. And also, you have to see yourself that it works, and then it works for you. But just because I say this, don't blindly believe, because we have to decide which one to get, which one not to get based on our own experience. But so at least for me it works. That's why I have been using this strategy for the last 6 years, and I will keep using my strategy from now on. So in this multiple time frames, I was using it before I create this strategy actually. So I was pretty familiar with the multiple time frame analysis. Back then, before 6 years ago, I wasn't using ichimoku kinko hyo. I was using some other tools and indicators. And even after I created this framework, I was still using moving averages. I was using 3 moving averages and doing multiple time frame analysis like this, and created my own strategy. But I figured ichimoku works much better than moving averages and to fit my strategy. And that's why I completely shifted myself to use ichimoku kinko hyo from daily to down to 30-minute chart, and then get the entry timing on M5 or M15. So I think, as I mentioned on the previous video, I'm not a trend follower. So basically, I only take trades when there is a trend. And when there is no trends, then I simply stay away. So that's also something confident on myself in this trading style. So so I'm not an active trader. I'm not actively trading every day, but the number of trades in average per monthly is 7 or 8. If I take like 15 trades per month, and that's very that's a big number of trades. For me, I take 7 or 8 trades per week, and then get the return of 10% in average every month. So I realized that less is more. Before I thought more is more, but now I realize less is more. So don't simply randomly trade. Just because the market's near resistance, simply don't sell, because it may break and goes up. Just because the market is supported, never buy, is my also big lesson in the previous career. So now I'm a trend follower. I only trade when there's a trend in the market, and when there is no trend, then I will simply stay away. So, and I will, on the next video, I will talk about exactly how I use Ichimoku 5 lines to identify which one is trending, ranging. But yeah, for today, it's an overview of my strategy. So I screen charts like this, and at a glance, I know which one is trending, ranging. It's very simple, but very powerful. So the strategies should be very simple too. I think that's also important. I used to use many indicators. I was putting like 5 or 6 indicators on the chart, and I was using, like I was referring to all these signals and indicators. But now I only use ichimoku for higher time frames. For lower time frames in M5, M15, I only use the Bollinger Bands and stochastics as indicators. And I use some tools like line, Fibonacci bounds, Fibonacci levels, and also Tokyo box I use. But mainly I use Bollinger Bands and stochastics and lines and price actions in Fibonacci. So lower time frames might be a bit complex to look for entry confirmations, but for higher time frames, it's really simple. It's really simple, but you can avoid the non-trending markets. So I think I found another good example for this Euro Swiss franc. Currently, for me, daily is down, but 4 hours flat. So I take the daily to follow. And as long as daily is down as per Ichimoku, then my projection is the market breaks the support and goes down. So even before the market breaks support, if there are entry confirmations, I take it and expect the market breaks the support. Because once it breaks, it goes really fast because it takes all these stop losses below that doji, below 0.9698. So I prefer to get entry before the break and expect that break to happen. So that's also what I learned based on my own strategy. Before, I was waiting for the break to happen and then sell, but and then the market reverse. Sometimes it happens. So and also I was waiting for the market reverse, like after the breakout. I was waiting for the market reverse, and hopefully I was going to sell like this, but the market just goes in along the way this way, and then retraces a little bit, and then continuously goes down. This happens a lot of times also. The market does not always bounce, does not always retrace to the previous support after the breakout. This reverse end wave below support happens also. So that's why I get the entry before the break. And simply, if the market goes back this way, supported and goes up back, I will simply exit with a very small loss, less than 1% loss. So I will be safe anyways. So whenever I enter the trades, I do also take into risk management into my trades. So basically, whenever I buy or sell, I will be safe in the long run. So I will talk about that also in the future video series. But yeah, today I just wanted to present my strategy overview on the bigger picture. So yeah, looks like in the month of August, this is the 9th of August, but still the markets are a bit spiky or are retracing. So for me, I think I will continue to stay away today. Okay, so that's the overview of my strategy. So hopefully you get the idea more by combining with the previous video, which I posted on Friday. And you get the idea of my strategy so that the things I say will make more sense to you in future live streams and videos on my YouTube channel. So in Friday, 12th August, I will talk about how to identify a trending market. So mainly I will talk about our screen charts in either daily, in the 4 hour, and how to identify a trending market on the Forex pairs. So hopefully you will enjoy this video on Friday. And also I teach this strategy, my own strategy, at the GTS class. So you can actually come to my webpage and click on the GTS link to access to the GTS website, and you can find the page like this. So in this page, I not only explain about what I offer in the GTS, but also you can find more videos like the interviews of the graduates of the GTS. I think you maybe find interesting. Maybe you will find someone from your own country, your own region. So you can click on that video and enjoy our conversation. And also you will see my performance every month. From this year, I started to post, started to explain my entries and exits on the live stream. So you can see my videos like this every month. And then also, if you also scroll down, you will see my live trades in private live stream in the past. So you can also view my entries, exits, how I take trades like this. These are some sample trades I posted. So you can also view these and enjoy the videos. Okay, so yeah, I guess I will end the video for now. But again, thank you for watching until the end. And if you liked it, please press the like button. And I will see you in the next one. So until I see you next time, please stay healthy and stay safe and stay gold. All right, bye for now, everyone. Mata ne. Thanks so much.